Hey guys, I just wanted to bring your attention. We are going to be running a free masterclass on February 23rd at 6 p.m. UK time. That's 1 p.m. Eastern time. If you're looking for more qualified leads, if you want more visibility, if you want to increase your income, I'm going to be sharing a masterclass where you can create and build your own digital summit. Now, I had zero experience when I launched this a couple of years ago, but we managed to master this. 3 summits later, we've managed to make over 6 figures. We've managed to create 5,000 qualified leads, and we've managed to get on the front cover of some of the most reputable magazines in the world. So if you're interested in learning more, click on the link below and join our free masterclass on February 23rd. It's a free masterclass. It's an absolute no-brainer. You got nothing to lose, and hopefully you'll get some great information. See you there. Take care.
This is the Game Changers Experience. Deep dive conversations with leading business disruptors, Olympic athletes, celebrities, entrepreneurs, and influencers from around the world. This show will teach you insights about the winning principles in mindset, productivity, marketing, branding, entrepreneurship, business strategy, and more. Hosted by Productivity Authority, business strategist, former elite athlete, author, and public speaker, Adam Strong.
Hello, everybody, and welcome to the Game Changers Experience with myself, Adam Strong. And it's great to be here. I love doing these live shows. And for you guys that are listening to the recording, well, listen, we do these live shows. You can also, if you want to really sort of tune in and ask questions and get involved with the Game Changers Experience, then you can do so by following me either on LinkedIn or also subscribing to my YouTube channel, and just make sure you click on that little bell to notify when we come into the room. So listen, today's show is by no means different. It's going to be fun-packed, engaging. For you guys that are listening in through our podcast or whatever it is, and you're going to have an abundance of different notes. So make sure you've got your notebook and pen handy, because we're going to be taking you on a bit of a ride today. So listen, without further ado, I want to introduce our guest of today. He's turned into a really good friend of mine. We share some very good common values. His name is called Nick Bradley. Now, Nick is basically a world-renowned business growth strategist, expert, if you want to call it. He works with mainly business leaders, entrepreneurs, and investors. And what he does is he helps to build high value companies, right? So he's worked with joint venture capitalists, and really kind of over the last decade has really helped. He's sold actually 24 different businesses over the last decade and raised over $5.2 billion, which is really impressive, a great track record. He's also a podcast host. He's a podcast host of Scale Up with Nick Bradley. It's the UK's #1 business podcast. I guess we must be number 2. We're going to be talking about how to create a life-changing exit, whatever that means to you guys. So some of the things we're going to be talking about, for example, what our investors and VCs and are looking for in terms of investing into businesses. When they consider acquisition or merging with other businesses. What do you need to put in place if you are a business owner or you're looking to acquire a company? What are the things that you need to look for? What are the red flags that you need to look for in particular? And you don't need to have any experience, by the way, with this, okay? Experience helps, but, making sure that doing due diligence and research is really, really important. We're going to be talking a little bit about what investors are looking for as well. And really tapping into Nick's knowledge. So without further ado, my good friend, Mr. Nick Bradley.
Hey, Adam, how are you, man? Good to see you.
I'm very good. Good to see you as well, buddy. I'm
fresh off the plane. I'm fresh off the plane from Dubai. I
was going to say, you look like you've just come off the beach. I'm like, what? You're like glowing. Do you know what I mean? You're glowing.
Thank you, mate. It's all the moisturizer they give you in business class. I feel like I've got to use like this Bulgari kind of set of stuff and just put it all on. So I thought, I'm going to see Adam later. I'm going to see all of his community. I've got to make my face look at least nice.
Absolutely. 100%. I love it. Well, it's interesting. How was your trip to Dubai, by the way? Was it good?
Good. Yeah, it was fantastic. I caught up with some friends there. I also caught up with Lauren Tickner, who's a friend of mine out there. And she actually was quite funny. We caught up around the marina in Dubai and went for a walk because she had to get her steps in.
Got it. Love it.
But
Love
I think
it, love it.
didn't she she spoke at your Game Changers Summit, didn't she, recently as well?
Well, she actually, there was a bit of a communication breakdown, unfortunately, but
Oh,
I'm
really?
sure that we're going to be collaborating a little bit further on down the line. So that's not a problem. But yeah, we love
Cool.
Lauren and we love what she stands for. She's great. And I love some of her Instagram reels as well. So kudos to you, Lauren, if you're listening to us.
Excellent. Well, it's
All
good to be
good.
here, mate. So as I said, I'm got a bit of sleep. Got a bit of sleep on the plane. So
That's good.
here
That's good.
here to serve as best I can.
Absolutely. So if you guys are listening to the recording, if you have any questions, we try to make these as fun as and interactive as we can. But if you're listening to the recording of this and you have any questions, feel free to connect to Nick on any of the links on the link below. And we'll make sure that we put those there. But I want to really kind of jump into this because this is an area which has really piqued my interest, especially as I've got a few sort of buddies, including yourself, that are in the kind of M&A space, and it's really a buzzy word right now. But let's talk a little bit about just really, really briefly, because I know that some of our audience, and they're all over the world, they don't really know of your area of expertise. But how did you get into the area of selling and buying businesses, first of all?
Yeah, so it started quite a while ago. I started close to, what are we now, 15, 20 years ago. I started working in the world of corporate for some big media companies. And I was in effectively what was the strategic marketing team initially. But that was thinking about customer segments, markets, growth, obviously. And the transition for that, if you like, or the step up from that was into corporate strategy. And that's where sort of mergers and acquisitions, or what I like to call the faster growth opportunities sit. So I was involved in both. It was great. So organic growth, which is, growing one customer at a time, and then acquisitions, mergers. And eventually I ended up in the world of private equity, spent about a decade there. And that's where I did 117 acquisitions, and it's 26 exits now that I've been involved in, because the last few years I've actually been helping entrepreneurs sell their businesses. So yeah, it's been a ride. It's always a ride, but I quite like it because it's, we can get into it today. It's not as complex as some people think. And what I like to say is that any small business owner, when they get to a certain threshold, should be looking at these things. If they're not, they're missing the opportunity to grow fast.
You know what? It's interesting. I think it's, especially over the last sort of 6 months or so, it never really, I suppose, occurred to me about the importance of M&A. And, and like I said to you, it's been a real buzzword, especially over the last, 18 months, 12 to 18 months, more importantly. It's a bit like when property and real estate became like the real kind of, you need to get into property and real estate like many, many years ago. But now, the coin has flipped, because people are now seeing that there's different options, rather than just kind of, if we want to create wealth or passive income or whatever it is that you want to call it, right? You get into property, but actually it's not the case now.
Yeah, it's one of those things that's funny though, Adam. I think, like, in the same way property has always been there, this has always been there, but there is a dynamic. I think where it started, and again, this is where I found it quite interesting. I've been doing it for a long, long time, but I never saw it explode like it has in the last 3 years. When there was a Forbes article written in 2019, 2020, this talked about this transition of wealth. And what it said is effectively all these baby boomers are retiring, and a lot of them have assets, obviously, that they've accumulated over their working lives. And many of them are business owners. And the figures were crazy. It was like 10,000 baby boomers per day. And this is still true today, by the way, are retiring in North America.
Right.
And this is the other one that really kicks it. There's something like 1,600 small businesses per day, again, in North America, being closed down. And these are not startups that are failing. These are profitable businesses like mum and pop shops, that sort of thing, getting closed down because there's no succession plan. And you think, so this is, to finish the point, and this is the thing I really believe in. Entrepreneurship is not a linear play. Like, entrepreneurship is not just starting a business. If you can go and buy a business and enter the world of entrepreneurship from that route, that vehicle, then that's just as valid as startup.
True. And we'll touch base on that actually a little bit further into the conversation, because I'd be interested to know more about that. But sure. I want to talk a little bit about what makes a company or a business valuable to be considered, either for acquisition or, to create some sort of merger with another company, when it comes to, needing extra finance or whatever it is. But what makes a company valuable?
Yeah, there's usually, I say there's four things to look at. And when you think about why do companies buy companies, usually it's because there's a viewpoint that the two together is going to drive faster growth, what I call exponential growth, or it's going to create more value. It's like that old saying of 1 + 1 doesn't equal 2, 1 + 1 = 3. I've seen it 1 + 1 = 11 in this type of scenario. And that's partly because private equity exists to grow value in a very, very precise way.
Right.
So if private equity is effectively these big firms that raise funds from pension funds, from high net worth individuals, they accumulate that together, and then they'll go buy a business, right?
Got it.
They'll buy a business, but then when they buy that business, they don't expect that business just to grow slowly over time. They expect to bolt businesses on. It's called buy and build. And when they bolt those businesses together, the value just goes through the roof really quickly. Okay. So that's kind of the thing. But to get to your question, so why does this happen? Well, first and foremost, when you put financials together, and I'll just talk about this quickly, like if you bring revenue together with more revenue, profit together with more profit, there's accumulation of value. So something that's got more profit is worth more than something that hasn't, but not just in terms of, well, of course, that sounds obvious, Nick, of course there's more money, but the way that a business is acquired, it's the multiple usually of the profit, which dictates the price. So if a business is making, let's say $1 million profit, that might be worth 4 to 5 times that if someone was going to buy it. But if that business was making 5 million in profit, it might be worth 10, 12 times.
Wow, big jump.
Yeah, massive. And the jumps, again, it's arbitrary, but that's kind of how it works. So financials is one reason. The second reason is there's a product that company has that my company is thinking about building. But you know what? Instead of wasting all the time, resources to do that, why don't I just buy that company and then I've got the product? Okay, so that's kind of a speed to market piece. Then you've got customers. So let's say I want to move into the US and I want to sell my products and services in the US. Instead of launching a sales team, setting up an office, why don't I buy someone who's got a beachhead there and I can then, explode from that place? A little bit like a Trojan horse analogy. And then the last reason, which I think is one of the really interesting ones, is the quality of the capability, the leadership and people. So instead of me hiring you, Adam, because you're awesome at this stuff, right? You're great at networking, putting on events. Why don't I just buy your business? And then I've got you, right? I've got the capability that you've got, but I've also got your customers and revenue and all that as well. So there's some of the reasons why people will do it. Got
it. I mean, there's some great examples. I mean, Amazon do it a lot, don't they? And Apple do it a lot.
Heaps.
They just swallow people up.
there's more acquisitions from Apple than you expect. I looked at it the other day. It's almost 100 and something in the last few years, but they're small. They buy little tiny things like little bits of technology and whatever else. But all the big companies are using acquisition as a major tool of growth for sure.
And they've done it for years, but you just don't really hear much about it. Well, unless you're looking in the right places, of course, you don't really hear so much.
I bet since we met though, and you said other people that, I bet you're more aware of it now because as soon as you 100%. See it, it's almost like once you see it, you can't unsee it.
That's
why it's quite funny. And it's like, oh God, yeah, well that business in my, I spoke to the guy at my local golf course or my cafe, like happened to me. It's like, yeah, well, why not? Right. Why not?
Interesting. Love it. Very cool. Now, I want to go back to your point actually earlier on, which was all about the baby boomers in particular and stuff. But there are lots of what I call tired business owners, right? And the people that have been in the business for a long time. Lots of experience. They're kind of stuck in their ways. They maybe are plateaued in the business or whatever it is, but effectively they want to exit the business, right? But the reality is that so many people, because like you had mentioned, they don't have an exit plan. What is and it's real sad to see that people just walk away without a penny in their pocket. They just close down the business.
Yeah.
And, and like the customer's lost, the data's lost, everything's kind of lost and whatever it is. But why is the numbers so big? Why is it that, a lot of these people that you come across on a regular basis are making the same common mistakes? Is it down to education? Is it because they're kind of like self-sabotaging. I'd love to know what your thoughts are about, number one, the reasons why the figures are so high. Number two, why we're not seeing more people actually exiting for a penny or a dime in your pocket when they do retire.
Yeah, there's a great question, and the underlying reason is people just don't think about it, or they think about it too late. So, I was having a conversation literally just before this with someone saying you've got to have an end game, right? It's the most important thing, and that end game might be 20 years down the track. But to your point, the people that I come across, the people who are at retirement age, so they're in the sort of 60s and 70s, sometimes even a bit older. Something's usually happened. And it's something that happens to everyone as we get older. They may be sick, or their partner's sick, or just something's happened, a massive life change. And we call that a distressed or a motivated seller. Now, what's interesting about that, it's not a distressed business, right? So the business can be great, but something happens. And first thing is people aren't prepared. The second thing is there's a knowledge gap of how. So quite often, if we think something's too difficult, we put it in a bucket over here, or a box, and say, well, whatever. It's like that whole thing. If I eat really badly every single day, but I don't think I'm going to get sick because I can't see it right now, I don't worry about it, right? It's that sort of thing.
Right. Yeah.
So you've got that going on, and the reason it's happening at scale now, it's a simple market economics thing. It's a buying and selling, or sort of buy, demand, supply play, where you've just got a transition of the baby boomers going through. So for people who don't know that, it's worth a Google, but obviously it was all the children that were born after the Second World War coming through. And there was just so many people born for reasons you can probably guess, and just as they're reaching that retirement age, you've just got so many businesses out there. And that's why, as a buyer, someone like myself, or someone like yourself, Adam, or someone listening to this, there's just too many things out there. So I don't want to say that it's like super easy. You've got to get out there and be focused and find the right business for you. But I often send people to a website called Biz Buy Sell. Remember, I mentioned it to you.
Absolutely.
And that's a US website, but it's just for fun. And you can go onto that website. It's a whole heap of businesses for sale in North America. And you can look in every state, every sector, and you can actually look at businesses, and you can see the reasons in the kind of information as to why people are trying to sell them. And it's all retirement. And then the second thing, it's crazy. And the second thing is there's a thing there called seller financing, which we can get into, which means that not only is the business for sale, the seller, the person retiring, is happy for you to pay for the business on what is called deferred payments. So you don't have to pay all the money up front. You can agree that I'm going to pay for the business over 3 years, 4 years from, and this is the cool bit, from the profits of the business you're buying off them.
Right. Exactly. And that's I don't know about you, but for me, it's kind of like, I see it as a bit of a common myth, where and that might be the reason why there's not enough businesses being bought in the M&A space, because there's this common myth where, this company's valued at £1 million or whatever it might be, and people think that they need to have £1 million outlay, that realistically, that's never going to happen. I mean,
that's right.
Do you know what I mean? So
not many people, not many people in the world have that capacity of having the cash just sitting there, right?
Yeah.
And that's why people think it's the big guys that can only do M&A, right? But what I'd say is this, right? When you buy, I'll start small, right? When you buy a car, most people lease a car, or they do it on some sort of PCP finance deal, right?
That's right.
Now, you and I might have the money in the bank to go and spend 20, 30, 40, 50 grand on a car, but we choose not to. We choose to pay it over time and keep cash reserves, whatever, right? If you then escalate that up to a house, most people don't even have the money to buy a house outright. Let's say your house is 300,000 for whatever it is, right? And so what do they have to do? They have to go and get a mortgage. But then, to your, again, like what you said, but in businesses, people then think, well, why would it be any different? That if I want to buy a business worth $1 million, okay, a bit more money, we get that I would suddenly have to turn up with all this cash. When you can do exactly what you do with a mortgage, you leverage against the assets of the business, borrow against those, and that gives you a certain percentage of the money to be able to get the deal done.
It's interesting. I do think it, and I think you've highlighted about the fact that it is a common myth. I think there is often a misconception between, the whole kind of mortgage example and buying a business. I mean, It just doesn't make any sense to me, but hey ho.
It's the same thing, but I'm really transparent around it. Like there are people out there who say you can get these businesses for no money down, right? Zero
Right.
money down.
Yeah.
And I've done a couple like that. So I'm not saying it's not true, but you've got to have a
Right.
very interesting situation for that to happen. So like you've got to be finding quite a lot of distress in my view, or you've just got to have superhuman levels of rapport and all these things. But you can go and buy a business for like 10%, 15% of your own cash or an investor's money down.
Got it.
So to your example, a business that's worth $1 million, you might have to find $100,000 from somewhere, but you're getting, 900K back that you're leveraging.
True. It's interesting because I don't know about you, but I've come across conversations, especially over the years that I've been in business, when I've been speaking with companies and business leaders, and it amazes me, especially what I would call the more inexperienced sort of entrepreneurs. And then it's like, what's the purpose in the whole kind of building a business, starting a business? What is your exit plan? And they haven't a clue, Nick. I don't know about you, but they haven't a clue. They're like, but I don't want to exit my business. If it gets bigger, then I'll just be in the background. Do you find those conversations are quite common?
There's three exits, Adam, right? So one exit is the one that I try and inspire people to look at, which is where you sell your business, you exit the business, you sell it for a multiple, which is effectively going to get you rich, right? Certainly financially free. A lot of my clients will sell their businesses and they'll take home an 8-figure sum. Okay. So that's anything over in the tens of millions, right? So that's more money than most people ever need, right? Certainly if they invest for it. The second exit is where you keep the business. Let's say it's a smaller business, but it makes a lot of money and you hire a manager and then you decide you want to go and do other stuff and the business runs. And I've got a few businesses like that where I make money off them. I don't do anything in them at all. I'm not even involved. They're not massive businesses, but they generate reasonably good income, and we don't think about them. So what I call semi-passive to some extent.
Semi-passive, okay. Yeah.
And then the third exit is you die, right? So, so what I say to people is, without being morbid, you're going to get an exit. Like there's a point where you're not going to have the business forever. So try and take some control of the terms of that exit when you can.
To try not kill yourself is what Nick's saying, guys.
Yeah, don't be the guy. And the other thing you mentioned beforehand, like it's not just about selling your business and getting some money in your pocket. If you have to close your business down, you've got costs, right?
Exactly.
Sometimes you've got to pay redundancies. If you've got some staff, you've got to try and sell stock. If you can't sell it, then you've got to, get rid of it. I mean, so you actually can lose money if you don't have an exit plan, as opposed to even making something.
Isn't that interesting? I never actually saw it from that perspective, but you're absolutely right. Very cool. I want to talk to you a little bit about personal branding, just really, really briefly, because, I mean, as you being in this game for quite a number of years, I mean, how important is it to build this personal brand so that an investor, a VC, or anyone that is looking to do a business deal with you, partner, do strategic alliances, or whatever it is, how important is it to build a personal brand, number one? And do they really look for those types of things when they, type your name into Google and think, oh, who is this guy type of thing, especially if it's a cold call and you don't, maybe you have a very, what we call infancy type of relationship or whatever it is. What's your thoughts about kind of personal branding? Because I think it's a little bit overlooked and a bit kind of, I don't know, not just overlooked, but I feel like people are a little bit ignorant about it. I don't know about you.
There's pros and cons. So I've been in this game for a few years now. And the reason I did it is I have a belief that it's easier to attract the right people towards you if you stand for and against things. So this, when I say it's good and bad, what I mean is there's also a risk to that, because there'll be certain things that I say that are absolutely going to alienate me from other people, right?
Yeah.
And sometimes, and I'll be really, really transparent about it. Sometimes that's not always great, because the argument is, oh, well, they're not your people, they're not the people, but sometimes they are. But it's just there's values that misalign, right? But I found the reason I do it, the reason I did the podcast and all that sort of stuff is, it allows me to put my message out there genuinely with what I'm trying to do, which is to help people, create freedom from these businesses and scale up and exit. And if they need to hear that, I'd prefer to be able to put the message out there, and then they can come. And, if they like what I'm talking about, they can find out more about me, right? And they can listen to me on the podcast. Some people listen to all the bloody episodes back to back. But I get messages, I'm sure you do, Adam, where people say, "You've changed my life, man." Like, I still pinch myself a bit from that. Yeah. So I sort of think to people, if you really want to have a go at something and you want to leverage the opportunity that's been presented through metaverse, social media, whatever we want to call it these days, you've never had a better opportunity to get your voice out there. And if you think about, well, what's the alternative? Well, the alternative is, you have to go out there and find people, and then you have to try and convince them that you can help them. And it's just a long process, right? It's much easier to have that magnet of people coming towards you. So I say to people, it's changed my life, right? It really has, from where I was doing the private equity stuff. I wasn't known to anybody before. And these days I've got friendships, partnerships, we met through this. I'm going to Florida next week. I'm catching up with my mate, Matt Andrews. He's bringing his kids and his whole family to Disney with, my wife and that. And these are people that I met on places like Clubhouse, podcasting. I interviewed Robin Sharma yesterday, one of my heroes,
Great guy.
He was cool. But just opportunities like that have come from creating a personal brand. So that's my view. Is I think it's a really important thing. But I'll finish by saying, I totally appreciate it's also not for everybody.
Yeah, that makes complete sense. But I suppose you kind of have to weigh up the pros and cons, and this whole kind of, I don't know, it's not that it's an imposter syndrome problem, but it's kind of like, some people that are listening in, they might not want to be seen out there. Do you know what I mean? It's kind of like, it might be a confidence issue. I don't know. It could be.
I think it is. I think it's, putting yourself out there takes courage, right? Because if you think about it, most of us, I'll say you and I, but a lot of people like to hide in the shadows. And, and this is the thing, like, as I said, I get people come and say that the stuff I've done has changed their life. Equally, I'll get people saying, they wish I was dead, right? I've had that. and that's
extreme.
Well, it's true. I had a person write to me and said, "I hope you die from drinking the devil's urine."
What? That's a bit extreme.
I don't know what it was from, but then you've got to take. I didn't do anything wrong, right? Like, in my mind, anyway. But you've got to contextualize it to say everyone's living their own world, right? And they've got their own perceptions, values, and what you say that will absolutely help one person is possibly going to be the opposite of what another person thinks. And so I can see people get worried about that. And what I find is it's a little bit like going to the gym and working the muscle. Fitter you get, the more you work the muscle, the more you kind of get used to it. It becomes a habit and routine. So I just don't care about it anymore.
Yeah, very true. What about investors and sort of venture capitalists and, sort of investors that are looking at you, whether it be in the big wide world of the internet or whatever it might be, but do investors and venture capitalists and capital equity firms, do they look for you being out in the big wide world? Do they do their due diligence and check you out and, like to kind of
a little bit, but they're not the people I'm trying to work with. So, so they tend to tolerate me. So
just
and the reason for that is, and listen, it's all very fair and amicable, but it's what I've done is I've taken what I call the playbook of private equity. That's kind of a little bit like a secret handshake club.
Yes.
And I've demystified it and made it more simple and approachable,
yes.
even though it's still got its own complexities. And then what I've said is, if you're a business owner, let's say you're a business owner that's just hit 7 figures, right? You've built a good business, you're, just getting over the millions, and you're in that sort of, how do I get to 8 figures, right? I'm teaching those people how to do that the private equity way, the quickest way, right? And the most valuable. And that kind of can grate sometimes with investors who are like, well, why are you doing that? Because that's how we do it.
Do you think it's like, also I get a feeling of this kind of culture of insecurity on their part? I don't know, what's your thoughts on that?
Well, you've got to think that what I'm really doing is flying below the radar of what they're trying to do to sell up the chain to them. So what I mean by that, without being too cryptic, is, there are people, usually young MBA types, sitting in private equity firms, and all they're doing every single day is writing or calling up small businesses and playing the massive rapport play.
Got it.
And quite often, and a lot of my clients are like, I get these letters all the time. I said, yeah, I know. You will. And what I found is sometimes it works out really well for the business, right? But quite often the business owners don't know what to do, and they go down a process and they don't quite get what they should have got, right? And so I sort of go, well, instead of doing that, why not get ahead of it and start to act like they're going to act? So instead of waiting, reactively to be acquired, if you decide that's your exit, why not get in front? Why don't you go out there and find your acquirer?
Yeah.
Why don't you go out there and do partnerships and joint ventures? Why don't you build? And so the stuff I focus on these days in the kind of scale fast, exit rich sort of playbook, what I call scale to sale, is building back from that idea and making sure that the foundations of the business, growth, processes, all of it are aligned, so that I know when a private equity firm comes or a corporate and they look at the business, they're going to be looking at it in a way that I would have looked at it when I was in private equity. And they'll go, this is really good. And I go, yeah, it is really good. Guess what? They're more expensive. And of course, the entrepreneur, the business owners, they're going, what just happened? Well, not right. I'm being a little bit sort of, gracious with it, but they're starting to see something very different. And if they continued on the path by themselves, they wouldn't have understood what they needed to do to get there.
Yeah.
So I just teach them that, just a knowledge gap.
Very cool. Very cool. All right, let's get back to our conversations around buying businesses and kind of looking at the different options. Because I know we talked about it on the summit, but I know that not everyone that's listening in was listening in and stuff like that. But let's talk about the different ways in how to buy a business. I know that there are ways to buy a business, but there are also ways in which you effectively can exit your business. And they're two different methodologies, but let's talk about buying a business first of all. What are the different options in which we can fund it? And you mentioned on our last conversation, you don't even have to have any experience or very little experience. Yes, you'd have to do your due diligence and so forth, but love to know what the ways are to buy a business first of all. Let's talk about that.
Yeah, well, you have to learn a process, right? So there are businesses out there, and some people intuitively, because they've run their businesses well for years, kind of get it. I was with a guy last night in Dubai, a friend of mine, and he's in the process of exiting his business, and he kind of just said exactly what should happen. But it was very good, actually. I was like, well, you know it. But first and foremost, you need to learn some basic things, right? So what's important in buying businesses? Well, you need to know firstly what type of business you're going to buy, right? Sounds simple, but where is it going to be? Is it going to be close to your home? Is it going to be overseas? Is it an industry that you know? Is it an industry that you have a passion for? Those sort of things. What size? What sort of structure? So that's the first thing. So we call that deal specification.
Deal specification, right? Then
you want to then work out a model or a process again of finding those deals.
Yeah.
And the simplest way to say it on this conversation today, Adam, it's like a sales funnel.
Yep.
And I say you might start with, in the sector that you said you were going to go after, in the region, all those things, you might go out there and try and find 100 leads at the top of the funnel. So 100 businesses before you even speak to the seller and work out whether it's for sale and all that sort of stuff. You've got, that. And the way you can do that, you can prospect on LinkedIn, you can run Facebook ads to a lead magnet, all the basic sort of things. I find writing personal letters to people's home addresses on company's house is a great way of doing it. And
that's a good idea.
You can get PAs to do that, so you can pay $5 to $10 an hour, so you don't have to do that, right?
Yeah.
But you get 100 right out there, then you might get that down to 20 or 30, where you start to have some conversations, and then from that, you might only get 1 or 2 deals away. So, but again, that psychology method, if you like, of a funnel is how I think about it. So then you've got, okay, what happens then? Once you've got those 20 or 30, you've got to call them up, and you want to build what I call the first most important skill of deal making is rapport.
Yes.
Superhuman levels of rapport. And what that means is that if someone starts to really trust you, they're firstly going to hand over their baby to you, right? So if someone's had the business for 30 years, that's their life.
That's the tricky part.
Sometimes the money is less important. Sometimes it's like, I've had Betty running the reception area for years. I don't want Betty to lose her job. Right. Kid you not, these are the sort of questions you get into. So you have to show that you are that safe pair of hands. Yep. Secondly, if you're going to negotiate, what I'll get into in a minute, that seller financing where you're going to pay for the business over years from the profits, no one's going to do that sort of deal with you unless they like you, right? And trust you. So rapport is the number one skill. So you do all that. And then you get into negotiation and all that sort of stuff. But as you do that, this is where you would build a deal team.
Yep.
And you need to have a really good M&A lawyer. You need to have a good corporate sort of finance person. There's quite a lot of people out there in this space who are trying to do deals. But the way I think about it is someone leads the whole negotiation. Someone leads the deal. That's usually like a front person, whatever else. They're the one building rapport, etc. Then you'll have the finance and the legal teams. And if you buy a business that's not in the industry that you know, so I've done a lot of stuff in education, professional services, media. Let's say I want to buy something in manufacturing. I might bring in someone who's an expert in manufacturing and I'll split the equity with them. Because if I want to go and raise some finance to get the deal done, and I'll explain that in a second, it's good to have someone in the deal team who comes from the industry. It just provides more credibility.
Yeah, that makes complete sense.
And then I'll finish by just saying the financing. How do you do that? So, well, there's different ways, but I focus on what is called leverage buyouts. And that's where you're leveraging the assets, usually on the balance sheet of a business, to be able to borrow against. Things like real estate sits there, obviously, machinery, any inventory. But the one I like is always things like receivables, where someone is effectively, the job's been done, the invoice is put out, you just haven't been paid yet. And remember, that's not the business owner's money, that's the business's money. So you can actually raise up to 70% finance against receivables. Okay. Nice. And so you do all that, right? That's asset finance. And then you agree, you negotiate with the seller. Okay, we're going to pay over 3 years because you want to go sit on a beach or hang out with your grandkids. I'm going to take the business off your hands, right? In order to do that, I'm going to pay you this amount of money up front, okay, the closing payment, and that comes from the asset finance. And then I'm going to pay you the rest over this period of time. And sometimes I like to keep a little bit of their equity in the business and say, why don't you keep 10, 20% in? And my job is here to scale it. I want to scale it and sell it, right? So the next 3 years. So if you leave a bit of equity in, that 20% is going to be worth a lot more in a few years' time as well. And a lot of them like that. They go, oh, that's interesting, right? But everything comes down to the credibility of whether you can do that, right? Are you the person who can actually run that business and bring fresh thinking and new ideas to that business that perhaps, they have not got, or they've just lost the impetus for?
So, quick question around that, because you said, in a lot of cases, you like to keep the business owner involved, and give them sort of 10, 20%, or keep 10 and 20% already staying in the business. Why do you do that? Just out of curiosity.
Well, it means the amount of money I have to raise up front is less as well.
Oh, that's true.
So remember, I'm only buying 80% of the business. I'm not buying, I will always take the majority. I will always own the business. So it's not like it's you're running the business or not. It's just, I find it doesn't happen in all situations, but if someone just doesn't want to run the business anymore, they're tired, they're worn out. I mean, a lot of the businesses I look at, you go to their website, Adam, and it's like shocking. I mean, it's like, it's like something out of, remember MySpace? That social network. It's like,
1972. What?
It's like comparing MySpace to Facebook or something, right? And there's typos and all this. And one of the things that's really important is two really good skills. If you're either an entrepreneur who wants to scale via acquisitions, or let's say you're in this whole great resignation thing right now, you're a corporate person who's been magical at sales and marketing, and you want to now be an entrepreneur. Well, my advice is go and buy a business. Don't start one, right? Go and buy something. But if you're good at marketing and you go into a business, they've got a bad website, they've never done any ads, they've just handed flyers out around the local thing. Just imagine how easy it is to optimize the marketing and then start to drive growth, particularly if everything else is in place.
Yeah.
That's how I sort of look at it.
Interestingly enough, because I know that you've obviously bought businesses yourself, and you are a business owner of 7 other businesses and stuff like that. And I mean, one question that comes to my mind, and probably some of our audience's minds, is how do you manage all of this, Nick? I mean, I know that a lot of the time you're not involved in the actual operational side of stuff, but then the question then that comes to my mind is, okay, well, if you're spending very little time in the business, then how can you increase the valuation of that company to then effectively either exit or hold it or whatever it might be? I'd love to know what your thoughts about that, and kind of what do you do if it was, in your businesses and stuff like that? How often do you go into the business? What do you bring to the table? Are there certain things that let's start with that first of all.
So there's a couple of things here. The businesses that I'm buying are usually under sort of $10 million.
Got it.
And the reason for that is I want to buy them when they're quite simple. I don't like complex things. I'm not buying, SaaS Uber businesses and all that. Right. I'm buying car washers and, laundromats, and we're looking at kind of window fitting, that sort of
Yep.
stuff, heating, ventilation, cooling, that type of stuff, HVAC businesses.
Cool. Yeah.
Services and or sort of product businesses that a product is being sold from that. But we really like the recurring revenue from the services. So,
Nice.
so to your question, they're not strategic juggernauts, right? So the person that I want to run the business is probably more an ops manager than what you'd call an MD, even though you might call them an MD.
Got it.
And then the second thing is, I'm not paying them to be strategic. I'm paying them to deliver precision.
Yep.
Right. High levels of precision.
Yep.
And then what we do, and I recommend this to all my clients as well, we put a structure around the management of the business and any of the kind of activities of the business. And we work to what I call a 90-day cadence. So we'll have an annual planning process, no more than that. We have a vision around 3 years for an exit, but the annual planning is the financials. That's normally a day or a 2-day, once a year event. Okay. Strategic. What are we trying to do this year? How are we going to do it? And I might bring some people in for that, not just myself, but anyone I bring in is there to help with the strategy, and the operational people are there too. The ops manager's there, but the ops manager's there is just to listen and understand what they're going to be doing.
Yep.
Then we'll have usually a half day or a day, a quarter, where we focus on the strategic priorities and make any changes to those. And that's what I call the 90-day cadence or the 90-day sprint. Whatever's agreed on that day or that half day is then executed over 90 days.
Yeah.
And then we have once a month check-ins, and that's normally a 90-minute meeting, 90-minute call, Zoom.
Yep.
And then if it's a new business or there's an issue, and sometimes that obviously happens, we'll have weekly calls for around about 30 minutes.
Got it.
But those weekly calls, the other thing I'll say is everything is metrics driven, everything. Right. So we're looking at scorecards and cadence. And the playbook I used to use in private equity, and I still use to this day, is by Gino Wickman, a book called Traction.
Nice.
And we love the simplicity of that model. And we use that model quite a lot in the businesses I've got. So just a long answer, but effectively, I'm not in the business operationally. I'm in the business strategically. I'm engaging with the business sometimes on a weekly basis still, but quite often it's a monthly basis. I'm looking at numbers all the time. I'm getting reports. And then strategically, it's every quarter and every year that I am quite actively involved. But I enjoy that part of that.
That's cool. And then you mentioned, what is your average exit from a business? Is it, you said 3 years, right?
We like to do 3, but it can be 3 to 5 would be the average.
Could be 3 to 5. And with the business that you've acquired, so for example, your businesses that you've acquired, do the people that have, the team and the employees as part of that business, do they know that eventually 3 to 5 years down the line, you have an exit strategy and you have an exit plan? Is that important in terms of?
I don't bring that up all the time. So that conversation, it depends. It depends on the type of business, the person, the people who are in there. That conversation is probably known. Certainly is known at the investor level. So if I've got other partners who have helped me do the deal, who have parts of equity, then we'll have that conversation. But we don't try to make it complex. So what I'll do in a business, and I do this with clients too, it's the same process. It's a 3-pillar process we call scale to sale, right? Yeah. First part is clear end game. So there will be an end game to realize value at a point in time, right? So we'll say, in a few years' time, we'll probably look to be selling this business, and we're trying to do it, but I won't go details, this number and this is how much money we're going to make out of that. Then the middle part is what I call scale fast and build value, right? So that's where we're looking at the marketing, we're looking at the processes, we're bringing in different types of capability as required, we're doing joint ventures, we're looking at other acquisitions, right? But that process there is the engine room. That's probably a 2-year process if we're looking at around about a 3-year exit.
Got it.
And then as we get towards that, as the business is growing and it's looking more valuable, the last 12 months, we get super intentional on the exit. And that's when it'll become more common knowledge in the business. And quite often we'll offer options, share options and things like that, because we want to structure the business that if we sell it, the people that are in the business are incentivized to stay on in the business to then run the business for the new owner.
Got it. Now
so it's not,
Yeah,
Is
that was
okay?
kind of my big question, because it's, kind of the insecurity of this culture of like, oh my God, I'm going to lose my job type of thing,
Yeah, but everything can be done through clarity of communication,
Yes.
incentivization, and and this is the other thing. Like, if it's not the right fit for someone, and I had this conversation actually a couple of days ago. When you go and buy a business, the most I've ever seen of staff churn is 50%.
Mm.
Right? Now, often it's about 30% of people leave because they love the old boss or their manager or whatever else. But most people have got mortgages,
Oh, it's got bills
house,
to pay. Yeah.
school fees, like, and as long as everything's clear in the communication and people looked after, you
Yeah.
find that, unless it's a misalignment of their values or something, which it's not, most people kind of give it a go. They give it a chance.
Yeah. Some good points there. Very cool. Excellent. And then with regards to, so you've talked a little bit about how to buy a business. Now let's talk a little bit about exiting,
Sure.
so because I know we haven't really touched base about that, but when it comes to exiting the business, so you're the motivated business owner. Well, should we say not so motivated? Should we say tired business owner that wants to sell, right? And they might be listening to this podcast right now, but you're just not sure where to go, what to do, what things that you need to have in place. Any advice there, first of all?
So, it depends on the business a little bit. What I don't suggest you do is just go out to a broker. And this is what a lot of people do. Sometimes they'll just go to their lawyer or their accountants. One of the first places you find out about deals is from accountants, because people tell their accountants before they tell their wives or their partners and whatever else. Which makes sense, doesn't it? It's like, well, I'm thinking.
Yeah.
Well, the conversation is actually sometimes I'm thinking of winding the business down, and then it's like, well, you sure you should do that? And then a broker comes in, and the problem is, there's a lot of businesses out there that are just such small businesses, subscale businesses, that you're really just selling a job.
Yeah.
And,
Agreed.
and if a business is making, 150, 200 grand a year profit, all the way probably up to, even up to 500,000, which sounds like a lot, but with taxes and everything else, it's hard to then say there's a lot in that, other than the owner is the bottleneck, right?
Yes. Yeah.
And if you go out there and say, I'm going to sell my business, you go to a broker. Sometimes the broker will charge a fee up front. Yeah, I'll sell your business. But it's really hard. And so what I say to people like that is, firstly, give yourself a good runway. If you want to sell your business, give yourself that runway to sell it and build it up to a better level. Build it up, to something that's a bit more interesting. Or when I come into some of these businesses, I'll just do basic things. Like, I'll start to call up the suppliers, again, confidentially, or sometimes competitors. That can be quite tricky and sensitive, and just suggest partnerships and other things. And then you find that the conversation just develops into an acquisition, right? And they're the exit. But that's the sort of thing that people should be doing. They should be looking at where their exit's going to come from. Right.
Like that.
So yeah, and that's, and if you can't work that out, then obviously you bring people like myself into the team in to help you with it. But if you, a lot of the time it's like, oh, hold on, my supplier's growing. There's they just bought another company. I wonder if they'd want my company. Okay. And then the sort of the penny drops a bit from there.
It's like you're sowing a seed initially, because you're already ahead of the game. Do you know what I mean?
Better to own the process. So, back to what I said, if you're clear about your end game, if you've got time to build value, definitely do it. And then when you get on that pathway to exit, the things I look to do is I look to take out any costs in the business that aren't driving value, because again, it's going to increase the profit, therefore the value of the business.
Yep.
I look to do partnerships and things like acquisitions in the last 12 months to start to bring together a bigger, because scale does matter to some extent, right? Having a bigger entity matters.
Yes.
And then, from that, it's really just about getting a good accountant or finance person to come in there and help you put the proposition together. Because sometimes the way that you package the business and the way you tell the story, and I'm not talking about the more complex private equity deals, but just the way you can position the business can increase the value alone.
True.
So there's some pointers there for people who are listening that might be thinking, how do I start this?
Very cool. Very cool. Listen, I know we're coming towards the end of our conversations, and as much as I love talking, we could talk about this because it's such an interesting subject. It really is a really interesting.
There's a lot
subject.
more depth to it as well.
There is a lot more depth and stuff like that. But for the guys that are Well, first of all, I suppose a summary question would be: is what are you working on right now? Because you've been doing this sort of 12, a good sort of 15, 20 years now. What are you working on right now? Love to know what you're working on right now.
Yeah, so I spend my time. So it's quite interesting. So I've got, as I said, we've got 6 businesses actually at the moment, because we've got one that we've put together with another one.
Yep.
So that's interesting. So I'm always looking to buy businesses. So we're looking at the moment in Florida for various reasons. Also because we're looking to take the coaching consultancy business out there as well. So I'm working on that. Our coaching consultancy business, which is called Scale Up Your Business, has been growing a lot. Like, it's had a really full-on couple of months actually, and it's driven, I think, because of the scale to sale idea. The concept of that is a bit unusual. Not many people do that.
True.
So
true.
I'm spending quite a lot of time talking about that with clients, and I don't do as much client stuff as I used to. But the last couple of months, that's why I was in Dubai, flying to Florida, all that sort of thing.
Yeah.
And then the last piece for me, we talked about it briefly at the beginning, is my podcast rebranded. So it used to be called Scale Up Your Business. It's now Scale Up with Nick Bradley. I've got some guests coming on that are just off the planet, and I can't say who they are.
I know a couple of them, by the way, but I'm not going to say. You guys are going to have to go onto Nick's podcast, onto Apple, all the good platforms, and go download. Honestly, it's a great podcast. I must say so myself, even though it conflicts with my one, but it doesn't really conflict because we're both wicked and awesome people anyway.
Yeah,
so
you've got to have a repertoire of podcasts, because you can't. Otherwise, people are going to get sick of my voice. But I think the other thing I'll say this is, my podcast is more about growth and mindset than it is about business these days, even though it's business focused. And I talk about the identity of who you need to be to do the stuff that we've talked about for the last hour. So that's where I kind of tend to play these days, because, I just honestly believe that, you can only scale a business to the level of your identity.
That's very cool. Very true. So hope you guys have enjoyed today's conversations with me and Nick. If you have any questions for Nick, please do reach out to him on any of the channels, and you can do so by clicking on the links below. Do mention the podcast, by the way, when you do reach out to him. He's very busy, but essentially he'll always have time for people that come from my podcast, of course.
I do my best. You know this. I always try and get back to when you contact me as quickly as I can as well. So, I'm doing my best.
There you go. Exactly. So, guys, hope you've enjoyed today's episode. Make sure that you listen to, we'll be here again as well. We've got some amazing episodes coming up as well. So make sure that you listen in. So I hope you've enjoyed today's episode, and see you soon, I guess, from me and Nick. Thanks very much. Appreciate your time. Cool. Take care.
Thanks very much, guys. Thanks, Adam. Thank you.
Hey guys, I just want to say thank you so much for listening to today's episode on the Game Changers Experience. I would be gratefully appreciated if you could leave a good or a bad review. It doesn't matter, 1 or a 5-star review, whichever you prefer, on any of the platforms, whether it be on Apple, whether it be on Spotify, Podchaser, etc. And please leave a testimonial or review about our podcast. And if you have enjoyed our podcast, then I look forward to seeing you on the next Game Changers Experience. Take care. See you soon.